Another record year for industrial property. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from commercialrealestate.com.au discussing the growth of e-commerce to drive another record year for industrial property. Now this is let's say the plain cousin of the sexy real estate market, but probably the 80s movie stereotype with the buttoned up librarian who, once they let their hair down, it's all on. Industrial properties, they're not as complex. I've worked on some as an architecture student back in the day. It's good money, good architectural fees in it back in the day. And I'm quite interested in this sector as a source of passive income over time and to invest in, because I can see growth here being pretty self-evident. If anything, it's going to be exacerbated and accelerated by the pandemic and, the adoption of remote living or remote working that we've all done. So the boom in e-commerce and the increasing impatience of consumers expecting same-day delivery of goods ordered online is set to fuel another year of record take-up of industrial space in 2021 as companies look to optimize and automate their supply chains. According to Colliers International, for every 1 billion spent on online sales, about 85,000 square meters of warehouse space is needed. That's interesting. We are forecasting online sales to grow by 12.8 billion to in 2021, which would result in demand of about 1 million square meters of warehouse demand from e-commerce alone in 2021, said Malcolm Tyson, Managing Director of Industrial at Colliers International. While mega-shed deals like the 200,000 square meter Sydney Fulfillment Centre Goodman is building for Amazon help lift the gross national take-up of warehouse space to a record 2.86 million square meters in 2020, according to JLL. Travis Erdrich, Managing Director of logistics company TM Insights, believes 2021 could see a greater proliferation of regional and inner suburban fulfillment centers closer to end customers in hub and spoke supply chain models. This means a greater industrial footprint and increasing demand for warehousing in capital cities and in the inner city areas, Mr. Erdrich said. Gone are the days of overly lean supply chains, and instead flexibility is key. Businesses need an agile supply chain that can cope with new demands of customers. Alongside this expansion of warehouse networks, TM Insight believes there will be an increasing uptake of automation, though it will be used more selectively as part of a fit-for-purpose solutions. For organizations where there is more volatility in their inventory, the risks involved, this may lead them away from full automation, whereas in the past this may have been driven purely by financial metrics, he said. Double-digit returns. More organizations may look at adopting mobile automation, which is flexible and scalable, in the sense that you add more or less robots according to how your business is performing. On the investment front, the logistics sector is also expected to boom again as institutional and private investors look to further reweight their portfolios to an asset class which delivers double-digit returns during the pandemic, while retail property returns turned sharply negative. As at December 2020, there is approximately 26 billion in capital looking to invest in the sector and broadly spread between offshore and domestic institutions as well as private investors, said Mr. Tyson. Given this, additional assets from corporate groups are expected to be brought to market in 2021 as groups look to capitalize on the continued strength of the industrial and logistics market. This includes a groundbreaking multi-billion-dollar portfolio of 45 mostly East Coast logistic assets being shopped around by US giant Blackstone, according to the Australian Financial Review's Street Talk column. JLL is forecasting national average prime yields in 2021 to continue to compress to sub 5% by the end of the year. They tightened 45 basis points to 5.06% in 2020 and sale volumes to match the 4.2 billion achieved in 2020. Offshore capital sources will be active via cohorts for the Australian industrial and logistics sector in 2021, says Sas J. Balhel, Director of Research at JLL. Australia is the beneficiary of two major investment themes: higher allocations to real assets and a portfolio reweighting towards Asia-Pacific. The expectation that Asia-Pacific economies will recover more quickly than Western countries is an additional driver, she said. Now, how can the average person take advantage on this? I would argue that perhaps looking at real estate investment trusts, which are heavily weighed towards industrial or logistical premises, could be one. Could be one. So I'd like you to leave your favorite ones in the comments down below. And I thought we would have a look at one that I could just find by purely looking into Google. I typed in industrial property real estate investment trusts, and we came up with Centuria. And this is by no means a endorsement. I just found them, so I thought we'd have a look at it. Centuria Industrial, REIT, CIP, offers investors a chance to invest in industrial property via a real estate investment trust, listed property trust. CIP is Australia's largest domestic pure-play industrial property investment vehicle and is included in the S&P ASX 200 index. CIP's portfolio includes 53 high-quality, fit-for-purpose industrial assets worth a collective $2.1 billion. The assets are situated in key infill locations and close to key infrastructure. So their objectives. CIP's key objectives is to build a portfolio of high-quality industrial assets to deliver income and capital growth to investors. The portfolio is well positioned with a 90% weighing to Australia's high-performing eastern seaboard industrial markets and underpinned by strong tenant pace, with approximately 60% of the portfolio income derived from occupants directly linked to the production, packaging, and distribution of consumer staples, telecommunications, and pharmaceuticals. Okay, so that's your indirect exposure, telecommunications and pharmaceuticals. I can't imagine that those two sectors are going to be hit particularly hard by a move to a more greater e-commerce world or even a pandemic. So let's jump over. Do they have their listed properties? Let's have a look. What do they have here? I don't want that one. I want the industrial fund. Here we go. Let's read more. So it's going, okay, this one's at $3. What's the other one? Oh, well, they don't have their properties here, but we can jump over here. Oh, here we go. No, sorry, property portfolio. So this is what they have. 2 Woolworths Way in New South Wales. So this is a method that the average person can invest to get exposure to these type of things. And it's something to consider, everyone. Real estate investment trusts, particularly in the States, they've got certain requirements to pay certain amounts out. They're different depending on different places you buy them in, and their tax implications that you need to talk to a professional about. But you need to at least know about it to have a discussion with a professional about it, or to at least do some digging and some research. Here we go, Queensland. I'm trying to see if I recognize... Oh yeah, Boondall. I'm trying to see if I recognize anything I ever worked on back in the day. Nope, nothing there. We worked on some stuff out at the airport there. So let's jump over to Trading View and have a look. We can see, okay, they were at over 374 and they crashed right down. And I'm going to turn off that ad and say, no, I won't start a 30-day trial. They crashed down to $2.26 and they're back up to $3.70. The technicals are saying neutral. The technical analysis. Oscillators neutral, suddenly neutral, moving averages neutral. Nothing much is happening here, at least on Trading View. No ideas. No ideas. No one's putting any ideas. No one's putting any videos. But what do we have here? If we scroll down, they were doing about a 5% yield. Where is it? Oh, about a 5% dividend yield. So there we have it. Let me know your favorite logistics or industrial real estate investment trusts that you're a fan of, or that you're aware of. You can have a look at them. or have you used these to invest in? How do you find them? Do you prefer them to actually owning the asset yourself? Let us know in the comments, guys. I've got a few friends that have actually, what they've done is, they've bought warehouses, entire buildings, one for their business and then just another. One mate was going to do it through the super fund, but then said, nah, you know what, I'd rather have control of it. And he did it on himself. Another friend as well, he just bought up the premises of where he put his business in. What do you reckon? Worthwhile investment? Let me know your thoughts and opinions in the comments down below and your favorite logistics or industrial REITs. And thanks for watching. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will talk to you next time. Bye for now.